Greetings, greetings, greetings. You are now tuned into the vault. Trust Christian own, nothing control everything. Just want to thank you for tuning in live or listening in the replay. Definitely another pop up episode. This pop up episode is going to be episode 150 Business versus Investing. And really excited about doing this episode, but definitely want to thank all the live listeners that are listening, able to pop on as fast as possible, and then everyone that goes back and listens in the replay to a very important topic that can be elaborated on for hours and hours and hours because the subject matter of 100 episode 150 business versus investing is a very different mindset, a very much so dynamic conversation for thought process towards investing. And so, very essential, very important to talk about and have discussions about business versus investing because they are two different things. So many people are not very clear or direct on the subject matter, and business versus investing are completely different subjects. They very much so mimic. But they're still very different. That's why they're two different words. Business is very general, where investing is a business. And so there's many different forms of businesses. Investing is just one form of business, but it's definitely not the actual general overview of being a business in general, where it covers all businesses. Some people say, well, don't you have to invest in all businesses? Partially true, but when it comes to investing in businesses, sometimes people think investing in businesses may just be capital. Capital is not always just a thing of investment in a business. It could be as well uh, people, time, energy, things of that nature. So business has its place and investing has its place. And so to talk about this, we get a lot of inquiries once again to the vault. People not knowing that investing is an actual business. So we're going to come back. We're going to bring Cornell into a pop-up episode today, and you guys are going to hear an episode, particularly how investing is a business. But business versus investing, so many people think that they can walk into a business and just throw money at it. People say, "Oh, if you have more money, you can do more things." Well, just because you have money does not mean that it is going to grow the business. A lot of people think that if they can just get money and put it into some savings account, which is a business, uh, that's a business, it's going into a bank, or putting money into a CD, it's going into a bank, putting it in a 401k, that's going in, these funds. Those funds are businesses, they're managed by people. Um, so they're investing in a business. They think if they put some money in a business, they can walk away. They don't have to put time in the business because what? They put money in the business. Um, so as you can see, the thought process can look like it's sort of like they're investing, but really they're putting money into a business. It's sort of like when people buy a franchise and they buy a franchise and basically the franchise is pretty much running. They put up the money, they've acquired the franchise. The franchise, the initial franchisee or the franchisor, takes care of logistics, takes care of marketing, takes care of human resources. That's a business. You're investing in a business. That's investing in a business, but it's still business nonetheless. And so but it's not just investing because it's not just passive paper assets. It's literally you having a human resource department, you having an actual marketing department, you actually having a product or a service. It's a business. So it has the business has more dynamics to it other than just you trading a paper stock or you once again putting up money into an investment and the capital actually returning back just capital. There's capital for capital in investing, whereas in business there's a lot more hand-to-hand combat, what we call moving parts. Businesses have way more moving parts than investments do traditionally. When you look into that investing, when you all look up, let's go to Investopedia's definition of investing. Uh, uh, and so Investopedia. Investopedia classifies investing is the act of allocating funds to an asset or committing capital to an endeavor. And in parentheses, they have business, project, real estate. Do you see how they distinguish business from investing? With expectation of generating an income or a profit. So you all can see that they're looking generally for some type of gains on capital, or like it says, a growth on an asset. In colloquial terms, investing can also mean putting in time or effort, not just money, into something with a long-term benefit, such as education. So when you all even look into the education aspect of investing into your private education with the vault, that's what it is. It's an investment. It can yield infinite returns. Some investments yield infinite returns. Some businesses are trending. Some investments are long term. Some investments have been around for hundreds of years. Some businesses as well. But traditionally, you all can look into investing and not just see that it's stuck on uh, allocating capital. They've tried to traverse the actual word into not just saying it's about money, but it's about time and effort into something for a long-term benefit. And they even consider investing in your education is considered an investment, not just you reading a book and getting some information. It's you actually getting some type of long-term benefit from the actual information that you've acquired, and that is, not just by having information, but being able to uh, use that information to benefit your money, or not just money, but your time and your effort, making your time more valuable, and potentially many other benefits. So, really excited about this topic today, business versus investing. So many people do not know the distinguishment between a business and an actual investment. But, when we even talk about businesses and we talk about operating businesses at the vault, so many people don't know the difference between a hard asset and a passive investment, or a passive, income stream. So when we talk about investing traditionally is going to be looked at as a passive income stream, and even businesses can be looked at as passive income streams as well. Just to give you contrast, where the businesses, once again, we look at franchise models. Franchise models traditionally are passive income streams. The business is turnkey. You can walk into the door. There's capital that's traditionally going to be open as soon as the doors are open on the business, or launching of the website, when you see those type of businesses. Whereas investing is a little is not a little bit more, but it's passive. It's passive. Traditionally, sometimes it's even based off of your time, based off of you going, acquiring knowledge, putting together a team for a project. In turn, that project is completed. That may take weeks, that may take months, and at the end of that project, through all of the time and money that has been, billed or invoiced, then now there is a return on investment, and so in turn, you all can benefit and profit from the return on investment. And that there's a big difference there, as opposed to it being just business. Most people in businesses want to get paid immediately, whereas investing is a little bit longer term thought process. Businesses still have longer term thought process in the respect that okay, you want your business to last 5 years, 10 years, 20 years, 30 years, 40 years, 50 years. You want to have some type of business that lasts long term, those type of ventures. But when we get into the investing environment, investments are even looked at as, when you all look at collectible art. So when you all look at collectible art, it's art, it sits there and it appreciates. It appreciates, that's an investment. It grows over a period of time. When you all look into collectible cars, those are things that grow over a period of time. When you look into diamonds, when you look into gold, when you look into silver, when you look into precious metals overall, those are investments long term. Now, when we at the Vault in Trustee Training, we always talk about gold and silver as a savings. So we can do an episode where gold and silver is a savings, but because there's so little amounts on it on the planet that have been discovered as of this moment, that it's still considered under the garment and cloak of precious metal, and so it's still something very precious. It's in your cell phone, it's in medical equipment. These things are very apparent. So investing is still looking for an immediate. You're still looking for a return on asset or a return on, capital, or return on, traditionally asset. Asset growth is the portfolio goal when you're looking at an investment, whereas business is looking for that direct business to grow. A lot of people say they're entrepreneurs, but not a lot of people say they're investors. It's the same exact thing, business versus investing. A lot of people say they're entrepreneurs that own businesses. They own one. They may own two. They're stretching if they own three. They're super stretching if they have four businesses. When you look across the business climate today, you see most people are looking to be very niche, looking to be in one particular business. They love that business. Even when you look at some top wealth hedge fund managers, even Robert Smith, his venture capital fund is particularly solely focused on uh, software companies. So, even though he's an investor, he's buying up businesses. They're solely in the software space. Solely. His portfolio just invested $500 million with a company, uh, I think it's Alt Returning or Alt Return, and $500 million with a software company once again. So investing in, he's buying businesses in that respect. So when you all look at businesses, like we say, they're traditionally very niche, very silo, very one. When you even talk about being an entrepreneur, traditionally most entrepreneurs don't state that they're investors because they don't have multiple business holdings. They don't have multiple business positions in their portfolio. They don't have portfolio thought process. It's traditionally just focused on growing that one business or growing two businesses that they have, or then they're growing three businesses. When you hear most entrepreneurs, you don't hear most entrepreneurs saying that they're growing three businesses at one time, and that's an investor mindset. So when you all look into the investor aspect of business, you all can see that the investor thought process is portfolio management, uh, looking more towards uh, capital appreciation. When you look into the businesses, when people say, "Oh, don't be focused on the money." In investing, you're definitely more focused on the capital, the money, whereas most business owners, most entrepreneurs are focused on the daily mechanics of growing the business, running the business. They're not focused on traditionally capital that's coming in, how to utilize that capital and grow that capital. They're looking traditionally as business owners to pay their expenses and have a good takeaway to go home with. That's what they're looking to do in most businesses and most entrepreneurs. So investing is looking to say, okay, we have new capital. How do we put the new capital to work in compound interest? That's traditionally an investor thought process. Uh, an investor's thought process is team oriented. Business owners traditionally are onesies, twosies, very silo-ish. If you do see businesses or a business owner, they do have uh, teams as well. But investing specifically demands that there's a team in place uh, for sure. And even business does that. It demands that there be a team, but that depends if you're going to go big business or small business. We're just talking about what would be even considered uh, all in general with business. That's not a infinite rule for business, but in investing for sure, there's the rule of having team in place. Very important. So um, definitely excited about doing this episode, business versus investing, because it comes across our table so often. It's very important to cover this subject matter when it comes to business versus investing, because there's so many entrepreneurs that they don't look at themselves completely as an investor. And by not looking at yourself completely as an investor, there's a disadvantage because once you understand and know that you are an investor, then there's an investor mindset. There's an investor mindset versus a sole proprietor mindset. There's an investor mindset versus a LLC single member mindset. There's an investor mindset versus a big business owner that has a business team mindset. Why? Because those are two different businesses. Business is business. Investing is just a business. Whereas a business can be many different businesses that don't involve you having to be, uh, you know, some investments can make money off of. Uh, intellectual property. We're very aware of that, where some businesses literally have to work off sweat of the brow, hardworking labor. And so that changes the dynamic of how the capital is going to be returned, when capital is going to be returned to the traditional starting out owners or people that initially put up the initial capital and things of that nature. Um, yeah, we definitely want to point that out because we even see so many people that don't know the difference between them investing in a business and them investing in an investment. Because an investment is traditionally, like we say, passive, where people truly do get capital for capital, and they're minimizing the activities that they're going to have to do. Very team oriented and strategic place where in businesses, there's a lot more, CEOs there for day to day operations, CFOs there for day to day operations, all chief executive officers in a business are there for day-to-day operations. Whereas investments, sometimes investments you can set it and leave it. Those are things that you can come back to and they're still going to bring returns. So we specifically talk about, when people are assessing a business versus an investment, there's a clear distinction in your thought process between is this a business or is this an actual investment? And that's something that we go over in the trustee training for trustees to know and make sure that that's very solid in your thought process, because that is very, very important when it comes to business versus investing, and having the savvy, having the acumen as a trustee to know the difference between what a business is and what investing is, and know the difference in the models and things of that nature. So if you guys want to enroll in trustee training, this is the final week for enrollment. It's Christian@trustchristian.com. Feel free to reach out. It's a 12-week program. We look forward to working with you all. The class is for the most part full, but we still just want to let people know this is the last trustee training of the year. So we're definitely looking forward to everyone getting going into trustee training if that's something that they want to partake in, and moving forward. So we look forward to you all working with us, Christian at trustchristian.com and the vault. Appreciate you all. Own nothing, control everything. Peace.